Thank you very much. I will not mention a single law or a single regulation or anything like that, even though traditionally I am a lawyer. Also, I am not going to be going through the detail of the review. I'm going to be dealing with three things. A brief snapshot as to what it is, a little bit more on so what, and then a little bit on what next. Now, in this discussion, I'd ask you to do one thing, and that is to lift your eyes off the tactical and just look a little bit strategic. The entire review wasn't about the nuts and bolts. There was an element of that in it, but the request was to design an open banking system for Australia that would become a consumer data right. In fact, the review was about creating the beginnings of a framework for an Australian data economy, and the banking sector was the first contributor to that. Please try and keep some of that context as we discuss it, because you'll understand more about what's going on if you do. So that is the front cover. Now, if you only read the front cover of the review, you would understand so much about it. And that's because the very first paragraph of the My Forward in the review describes the front cover. And so why did we choose customer choice, convenience and confidence? It wasn't all because those words start with C and looked kind of cool on the front. It was because it made sense. And there were themes coming out of that. And those themes were why? One of the first responses we got in our request for submissions in the review is, please make sure you know why we're doing this. Now, as a brief description, if you want to understand what open banking is, just think about what payments are when you're a customer. When you're a customer of a bank, payments are about asking your bank to pay your money to someone else, and your bank has to make sure it gets there safely. The framework of open banking works around there is something else valuable to you that you leave with your bank or share with your bank. Information about you, information that you share or the bank shares with you. Open banking is merely about you having the right to require your bank to get that information to someone else you trust who has been accredited as being trustworthy. If you understand that, you can understand an awful lot about open banking, and you really don't have to read through my 50 recommendations in the review. This is also another snapshot from part of the forward in my review, and in fact you can get this if you read the front cover and the first page of my forward. You understand an awful lot about open banking, or at least what I was thinking in constructing the review. But these are the bits. Now, when you are considering, if you are a business, and that may not be a banking business, you could be other businesses as well involved in open banking, these are really 4 critical themes, because they ripple through a lot of the policy decisions made in the review. And the Open Banking Review is a policy paper. We are now going through the operational elements, but it is a public policy paper. It should be customer focused. Everything starts, ends, and is always about the customer. It is supposed to encourage competition, but that is not just moving customers away from banks. It's also banks winning customers away from banks, fintechs winning customers away from fintechs. It's supposed to be a level playing field. Very different to some other countries where there was a different perspective on open banking. Again, a deeper level, and you can look at these as 4 different levels inside the review. Is it supposed to create opportunities? Create opportunities for the people in this room, for your businesses, to actually be a participant in another sector, being the data sector. You're at a point now where through this, you are being encouraged to participate in that sector, but you have a choice. You have a choice as to whether the footprint that you have now in finance is going to be the same footprint that you have in data. Data is not just an exhaust of your financial services business. It is a potential for a completely new opportunity. And I'll come on to the reason why in the very last slide. And it should be efficient and fair. The Australian Open Banking and Consumer Data Rights System is a piece of market infrastructure. It's just the fact that the thing of value being transferred is not money or securities, it's information. And there's very few people that would deny that information has incredible value. So the system has to be efficient and fair in the same way a payment system has to be efficient and fair. And what this meant, these 4 principles, is that there was an overlap between them, and there's a tension in between them. There's a tension in any construction of a system as to what do you prefer. Does privacy completely outweigh innovation? Is this only going to be about the banks giving data and never receiving it? There's a lot of tension. And if you're interested in that diagram, and this is a diagram I used throughout the review as I went through more than 100 meetings and talking to interested parties, many of them many times, as I was trying to record all the key issues and where do they relate. And some of them are in the centre. They are part of the customer, they are part of the competition, they are part of the innovative data sector, and they're part of efficient and fair. If you actually want to see an interactive form of this, you can go to King & Wood Mallison's website, and there's one there where you can click on the answers in the review for each of these questions. But the reason I'm putting this up is everything's interrelated. There's lots of themes going on inside the review. So, before I get, the next slide shows what happens next. There's a couple of fundamental principles in that tension. One of those fundamental principles in the tension is the concept of reciprocity, which I've actually already described, is that it is not just the fact that the banks who have to respond to a customer's request to transfer data are only transferring. They may also be the beneficiary of a request by a customer that someone transfers data to them. Another fundamental principle of that tension between the different principles is the accreditation regime. And so I mentioned that in open banking, it's important that not only is information going to someone that you have chosen to trust, but it is also going to someone who has been accredited to be trustworthy. And so there's a balance there about safety as well as innovation. And the accreditation regime that I recommended is a graduated one, and it's risk-based. So people can participate if they don't have the very best security arrangements, as long as they are using someone who does to hold the information. In other words, it can be a bit more nuanced than the way that it is often appears in some other countries of the world, and a bit closer to the way we deal with financial services, where you can have smart people managing your money, even though they are not holding it, and you choose someone else safe to hold it. The accreditation system can work the same way under open banking and the consumer data right. And they're just a couple of examples of how you can settle those tensions in the system. There are quite a few, and in many cases, the open banking review and the consumer data right turns to where this has been done before in Australia in financial markets, financial services, and where it's already been proven to work. So the government accepted the recommendations of the review and chose some start dates. And the most important start date for most people is the first one, which is 1 July of next year for the 4 major banks in relation to particular accounts. But anyone can start earlier than that, and of course there are a number of entities that have already chosen to start early in that and are working towards it. And so that then leads us into what next? Now, you'll see, and indeed yesterday, there was a new piece of legislation, draft legislation released. There are 3 parts of this. There are laws, there are rules, and there are standards. The laws look like laws, but effectively the laws are just a framework for facilitating everything. Then there's the rules, and the ACCC, which is the lead regulator for open banking, the Office of the Australian Information Commissioner is also a fundamental regulator, has already produced a paper in relation to the issues to be covered by the rules. And then there are the standards, which are currently being led by the Data 61, part of the CSIRO, on behalf of a data standards body. There's lots of things to look at once, but there's supposed to be. This is supposed to be something where we can be agile, not only in the private sector, but also in the public sector, as also with the private sector dealing with the public sector. So in a number of cases, these are requests for further input. And indeed, the law released yesterday was a result of the input already received. So a message here is please engage in these things, because these things will affect your business, your future, your footprint in the data sector. And people are listening for your views. The very last thing I wanted to point out is why this could be so important. It's because of this. Open banking is only the start. The entire regime is set up so that you can add new sectors. The banking is the first. Our government has already announced that energy and telecommunications will be added. So what I've described to you very, very briefly in relation to a data framework is not just about banking. And when you think about that and you lift your eyes just a bit off the tactical, if you have time, and otherwise you might be so worried about next July or the July after, if you lift yourself just above that, you might start to see a whole landscape of additional services that you can provide to people who are not even yet your customers because of this, because you in banking are one of the first players in Australia's consumer data right. Thank you.
Thank you very much, Scott. We won't take questions directly now, but you'll be a part of the panel. So I'd like to call up the additional panellists. That's Brett Miller, Danny Gilligan, Ian Pollari, Scott Farrell, and Vanessa Chapman. Thank you very much. And Kieran McKenna from Cuscal will be moderating this panel discussion on open banking.
Now, my challenge as moderator, we've got till 11:25 and then about 10 minutes for questions. So they're all yours to pummel. Why don't I get started with a... Thank you, Scott. You're first. Ian, for you, obviously KPMG is doing a lot of work globally with open banking, but can you talk to us about what's happening in other markets, just some of the use cases you're seeing?
Sure, and I think Scott sort of mentioned, I think, a few points of departure in terms of what we're adopting domestically. You know, he's touched on reciprocity. Another one which I think got covered yesterday by the Visa presentation was the difference between read and write only. And then, of course, as Scott also just articulated, that this will be cross-sector. And I think there's some substantial differences that I think present opportunities for banks in this market that will be different to perhaps some of the opportunities that will be realised in other markets. Now, the whole world is different stages of moving towards open data regimes, whether it's PSD2 or open banking. Some of those are mandated, some of them are sort of, let's call it the frameworks or the enablement that's been put in place. I think Singapore is a good example of that, where the MAS isn't sort of proposing a mandated open banking regime, but looking for an ability to guide banks and allowing effectively the competitive commercial dimensions to sort of develop from their open API structures they're implementing in that market. In terms of the use cases, I think a lot of the banking ones, I mean, I think the UK banks sort of all charged off with sort of looking at a number of different use cases, and certainly one of the learnings dawned was this is a big task to get ready for compliance, and certainly a lot of those banks that had done a lot of thinking around potential use cases quickly got into the reality of actually getting to compliance and operational readiness January this year. So that's not to be understated, and clearly given the aggressive timelines, it's going to require a fair bit of effort from domestic players to get ready. But in terms of the use cases, I think the bank-specific use cases, I think everyone's got a pretty broad sort of view on those, but you know, the ability to compare products, the ability to obviously aggregate accounts and look at personal financial management. I think a lot of those elements will quickly become hygiene, and I don't think there's going to be significant points of differentiation around some of those components. I think the things that are really interesting to me are the use cases where you start to extend out from banking, and clearly a lot of banks around the world talk about you know, facilitating an end-to-end customer buying a mortgage or a home, and facilitating the saving for the deposit, and then actually financing the mortgage. To extend that to the home moving experience, where that's clearly quite a significant friction point for a lot of consumers, whether it's a rental or purchasing a home, and the ability for a bank to orchestrate the provision, you know, the logical sort of catalyst that would be to sort of look at who's the best internet service provider, energy utilities. I think there's a great opportunity for a use case for banks to be exploring a broader mandate, but doing that around that particular experience.
Good, thanks. Danny, if I can turn to you. So you're the king of data and thinking around data. How do you see it?
I think open banking is the biggest regulatory intervention in banking in 20 years. But I don't think that that's understood by many people in banking yet. And I don't think we're going to see the really disruptive use cases for a number of years to come, probably. But touching on Ann's point, I think we're at the beginning of what we call the data wars, which is data really collapsing the borders between different industry verticals. And when you roll forward, particularly the consumer data right across all sectors of the economy, it's going to create some really fascinating dynamics. To Ian's point, some of these edge services where consumers are engaging in transactions where financial services aren't present, the experience will change from a customer deciding to buy a car or a house or engage in something, then coming to their financial services company, to just transacting at the edge. Things like Afterpay, Zip Money are kind of leading examples of consumers and finance being embedded in transactions. And open banking will facilitate that movement to edge financial services much, much more. So you'll see financial services being distributed out across other sectors of the economy much more freely. But conversely, I predict, maybe wildly, that within 5 years, banks will be the single largest resellers of telco and energy services. Because the reciprocal rights, if they're implemented effectively, will mean, in a highly engaged mobile consumer, banking consumer, there'll be a button next to their Optus bill on their phone saying, would you like me to check if you're on the best plan for you? You click the button, you pull in the calling records, you run it against an algorithm. You say, I can save you $20 a month. Click here if you want me to provision a new service. And all of that's done in 2 clicks. And so for those underlying kind of commoditized services, this highly engaged model built around data that banks are kind of at the center of, are going to create enormous opportunities. So there's going to be losses and wins, but it's all going to be built around this concept of kind of liquid mobile data that is going to become, I think, as big a sector as financial services itself over the next 20 years.
Okay, thanks. Brett from Data Action, welcome. Wayne Byers spoke yesterday around, you've got to protect your own technology and make sure you keep reinvesting. From core banking providers' point of view, how are you seeing it?
Yeah, so I guess we've been looking at open banking as, as an exciting opportunity that we can really look to advance the thinking within our customer base, and looking at the infrastructure that we need to support open banking. So, it's a real good opportunity to consider our investment in our technology. We've been using APIs for a number of years to open up our core banking technology, and so this is open banking is really just an extension of that. However, what we're also looking at and developing is our architecture so that we can protect ourselves. So as a provider of core banking systems to some of the more smaller mutual organisations, we actually see it also as an opportunity but also as a threat. So there's a number of different models that could happen where the big four could be consuming a huge amount of our data, which consumes a lot of our infrastructure and resources, and we're trying to protect ourselves against that in the way that we're architecting our environment. So we're very much working through all the issues as a core banking provider about how we can get our systems operational with open banking as quickly as possible in the right way.
Thanks. Vanessa, welcome. From NPPA. So Scott sort of gave us a bit of background as to how we've got to this point with legislation, etc. How do you see it? You're a lawyer. I'll have to declare that to the audience. How do you see the frameworks and liability and just the way that people will interact?
Right. Well, I'd make a couple of observations first, and the primary one is that we're already driving to a fairly aggressive timeline in terms of finalising the legislation and the rules and the standards, and that's all feasible and it can be done. The rules that have been developed by the ACCC, to speak to the point Scott made earlier, attempt to resolve or highlight where those inherent tensions are, particularly around how reciprocity is defined and how privacy safeguards might overlay with privacy principles that we're all really familiar with, and other aspects of liability and accreditation regimes. And we're still seeing the legislation develop. So yesterday, another tranche of another bill was issued, which relates to the further provisions for consultation, which go to resolving some of those questions. So we're in a really interesting space because we're still resolving quite significant issues of detail, with the expectation that those rules will be finalised and in place towards the end of the year, and that the first tranche of implementation will begin and be in place by July next year. And off the back of that, I would observe that the ACCC has already flagged that there's going to need to be a fairly broad exemption power. I think the other observation I would make is that a lot of institutions are swimming in data and they don't necessarily know what they have, and that if we're to deliver an open banking framework that meets the Farrell inquiries for key principles, but especially the fourth one, confidence, then there has to be an absolutely watertight and rigorous approach to security, privacy, and establishing a really fair liability regime. And the final observation I would make is that I think in terms of the accreditation standards for accredited data holders and the reciprocity arrangements that are being developed will engender a really effective and robust open banking framework, or an open data framework for banking. But there are some really interesting practical challenges associated with participating, particularly around the liability arrangements and the requirements for accredited data recipients to take out insurance, which is a really, being a typical lawyer and risk tragic, Kieran, the market for cyber insurance at the moment is really tight. So potentially a problem for entities that might have thought they'd be jumping straight into that data receiving space.
Scott, I notice we're calling it the Farrell Report already, so wait for that to come. Back to you, Scott. Your report was well written in plain English, and I think the industry went, that's good, that's great, we've got a tombstone to move forward with. But at the end of this is consumers, so how do you see us educating? I mean, the industry is looking at what open banking is, but we're not corralling together to say, well, how do we educate our customers, etc. How do you see that playing out? And is the ACCC and government at the forefront of that, or should it be an industry-led thing?
It's got to be both. We had regard to the work overseas as we're doing the review, and the participants and the orchestrators of the United Kingdom system were very clear with me, saying, we forgot the customer part, don't you do that? And there's a part of the review that really does that. The important part, though, is what is really the message that you're trying to get to the customer? Because if you have, it's about the customer, you have choice, you have convenience and confidence, what is the message that you're trying to get across? Now, the message is not really, part of the message for those in this room will be, you can use these wonderful things that we have designed to surprise and delight you as a customer. But there is another message, and it's a message which leads on from something Vanessa said, where we're already sharing so much data. Part of the message is, please could you understand it's valuable? Please could you be responsible with it in the same way you are responsible when you drive a car. Things that you do in ordinary life. We have drink responsibly, we have do this responsibly, do that responsibly. Somehow part of the message, which will be critical for this country going forward, will be please treat your data as a valuable asset, because it is, and please make responsible decisions for yourself in relation to that. And that, I think, cannot be just rested with the private sector. That's the public sector's job too.
I think to that point, just to build on that, clearly while banks will be mandated at different phases, as you've articulated, Scott, ultimately this is opt-in. So we can talk about open banking as much as we like, but ultimately customers have got to see a value proposition that's going to engage them in this process. And I think that's an important element of the narrative and the translation into customer value around the use cases.
Absolutely. Ian, if I can stay with you, the partnerships and the operating models. So obviously, you know, we're building this thing, and to your point, consumers, well, some will jump at it and some will say, well, look, it's not for me. But how do you see those partnerships and operating models working? I mean, you know, Danny will talk more about data, but people actually sharing data, and of course you've got some privacy laws which say, well, I don't like that. Hopefully Scott's legislation will guide us through, but how do you see those partnerships working?
Yeah, look, I think that's probably an area, I think it's come up already in the conference, that it's going to require a whole level of a lot more sophistication in how banks think about partnerships, and there are clearly partnerships that are more traditional in the context of sourcing capability from vendors and third-party providers like Data Action and working through what capability you need in terms of the tech stack. But I think the more interesting element, which probably Danny could talk to, is around the data partnerships and how that's going to work, and principles around fair value exchange, you know, how that is monetized. I think that was covered earlier on this morning, but having upfront conversations around that value and working through what you're actually bringing to the table in the context of data or other facets of capability. So I think that's an element that will require a lot more thinking and a lot more maturing from various players. I think the other thing as well is no doubt there'll be collaboration and partnership opportunities between banks themselves. You know, again, we've sort of talked already around this being cross-sector in its orientation, and again, partnerships with other third parties. We've seen you know, banks in other markets already forming relationships. We've seen in Singapore with some of the Singapore banks have got data sharing arrangements in place with some of the telecommunications companies. So, I mean, clearly that's all going to be done in a very secure, safe way. On the operating model, I mean, clearly there's complexity around, you know, thinking through, you know, ingesting data, sharing data, entitlement management, consent. And I think when you put yourself in the customer's shoes, they're going to be, you know, providing an instruction or consent to a bank, and then they'll do that with a utility, an energy provider. That's going to be enormously complex for consumers over time to sort of keep a record of where that is. And obviously there's been some measures proposed in terms of dashboards that can help consumers through that complexity over time.
Yeah. Danny, back to you. I know when we, in the lead up to today, you just bedazzled me with algorithms and just what you can do with data. Can I get you to comment on the way you see that sort of ecosystem working?
Well, I guess we've been architecting for an open data economy for the last 4 years or so. So for us, open banking was very much welcome as putting down, you know, just a line in the sand around sensible policy frameworks around the most valuable asset in our economy that's underutilised today. And so we've been facilitating banks, airlines, retailers, insurers, government, telco today to engage in data sharing arrangements consistent with the consent regimes they've got in place for their customers. And as an open platform, we've enabled, I think, around 500 different companies to build innovative solutions through those data partnerships. And it's just remarkable to me that there are effectively an infinite number of new ideas to be born of combinatorial data. One of my favourite examples I've seen was we did a hackathon with Melbourne Business School and Victorian Department of Health, and Qantas, Westpac and IGA supermarket data brought together. And the objective in a weekend's hackathon for 300 data scientists was improve the ordinary lives of Victorians. And the winning solution combined immunisation data de-identified to a micro-geographic level with Westpac transactional data. And by bringing those two things together, they could come up with a completely different routing algorithm for their mobile immunisation fleet of vehicles. And in a modelling, they estimated they could increase immunisation rates in Victoria by 10%. Now, that was 36 hours worth of analytical work. The algorithm is the commodity in this piece. The hard part is how do you bring data together in a secure, trusted, private, well-governed way. And so, in some senses, consumer data right lays down a framework to make that not just an internal risk and commercial decision, but a right driven by the customer. And as that pervades across the economy, you're going to see, infinite number of microeconomic reform, industry value chain issue solutions, new customer personalisation experiences, but also potentially a whole lot of new solutions to real social reform and public policy issues.
Thanks for that. Brett, I'll turn back to you on what was interesting is when the industry first got together to talk about open banking, the data standards and the technology and the security standards sort of came together pretty well. In fact, there was a time in that meeting, the first couple of meetings, where the big four actually sort of agreed it in 10 minutes. It was quite scary. Is it that easy, or are we headed down a technology data security path which will probably drive us slightly mad?
Yeah, well, I think we need to think that, you know, the idea that security is paramount and fundamental to the way this works, you know, along with the liability that goes with that. You know, we already do as much as we can to protect the data that we look after, but if we start opening it up and we start bringing data from other places, we need to protect that data as well. So some of those standards I think are relatively easy to agree on, so like using internet banking credentials, multi-factor credentials to get access to and provide consent to access the data. You know, they're relatively easy to get to. When we start talking a little bit more about open ID, digital identity and how that plays into it, it starts to get a little bit harder. And then also when you start thinking about like shared accounts or historical data. So shared accounts, who's got the ability to provide the consent, who's got the ability to say, no, that consent isn't valid, how do we notify everybody that consent has been given? And historical data, where you've got organisations or individuals that have had accounts at an institution and they want to open up that data to be ingested into through open banking in a historical sense, but they no longer have a digital credential that they can provide, and therefore how do you actually authenticate and provide access to those banking records? So it really starts to get interesting when you get onto the edge cases around some of that access. Good.
Well, we're trending on Pigeonhole. That's pretty good. We must have taken people's fancy as to question set. So I might throw to Ian. Will the major banks be ready for 1/7/19?
I think they...
With KPMG's help, of course.
Geez, I'm not sure. Yeah, well, look, obviously here to help everyone where we can, but look, I think, you know, I think given the political environment and, you know, I think they will be there. It's a question of sort of in what form. I mean, the other element is I think it's been clear that there will be penalties imposed as opposed to sort of what's occurred in the UK and other markets around failing to meet deadlines. So I think the Scott Law tests is sort of strong bipartisan support for open banking. I think given those elements that the banks will be making every effort to get there. It's a question of you know, what are the things they need to put in place? And they're all at different stages of having components that's ready for compliance and operational readiness. The element will be what beyond that do you look for? And I think the other point is that, you know, I think Scott may have mentioned sort of international banks, you know, and even mutuals and other players. I mean, I think it's pretty clear that there have been a few that have been quite public in their orientation to move forward with open banking early. And I expect others will be pretty active in trying to get to July in some form and perhaps take a bit of a wait-and-see approach beyond that or focus on a couple use cases. But certainly I would not see a future where we're going to have the big four ready in July 19 and then everyone a year later. I don't think that's going to happen.
And I know from the forums that people like AGL and Optus and Telstra have got their teams up and running, ready in advance. There was one there around read-write, which I might throw to Scott. Is write access the missing part of open banking? And Danny, you might like to comment.
No, it's not. There's a number of reasons which we consider this very carefully in the review, and there's about 3 or 4 reasons which we articulate in the report as to why write access was not recommended. And they really relate to some of the key differences between Australia and the rest of the world. One of the differences is we have, as a country, spent quite a bit of money on a brand new payment system, which is very good at write access in the sense of it makes payments. And a write access and open banking system is really a de facto payment system. In fact, in a legal context, it acts like a power of attorney to run your bank account. Also, a right access is difficult to put into place when you have the context of the entire economy and all of the sectors in the economy. It's not to say that it couldn't be offered, and certainly the open banking recommendations are only about a minimum requirement. But the review and I took the view that mandating right access in Australia was not required at this time. So no, I don't think it's the missing part of open banking.
Danny? Yeah.
I could not possibly improve upon that answer.
Right, good. I thought you might get there.
Awesome.
Whilst I just might, probably one for Ian and Vanessa, the reciprocity rule has always been an interesting debate. How do you know, so if you're in the game, others are in the game, and I think we've discussed that, you know, it's about fintech swapping with fintechs and banks, etc. And the other markets have had some challenges with that. How do you care to comment?
Well, I think that, you know, there are differences in other markets in terms of one-way versus two-way sharing of data. I mean, I think the what the ACCC are sort of now contemplating around a bit of a quid pro quo around reciprocity will be interesting to sort of see how that plays out, particularly as it relates to the technology giants. And you know, I think that's sort of an area, no doubt, there'll be quite a bit of consultation and input from the banking industry around how that will work. But you know, I don't think those challenges are insurmountable. Obviously, the element around also recognising that not all fintechs will have an ability to meet the full slate of the accreditation and an ability for an intermediated model where another party is providing components or elements of that capability, the security, privacy, etc., that's required, I think is sort of a sensible dimension, because ultimately we're looking to sort of foster that innovation, and we don't want, you know, again, with the appropriate sort of safeguards around it, we don't want to sort of close out significant portions. And I think it is a reality in the UK, while only 3 of the 9 banks were ready day one, the reality is I think there was only one fintech, and that was a fintech that was owned by a bank in another market that had launched a money management app. So I think that's the other dimension to this, is the time it'll take for even the accredited third parties to be ready as well.
Okay, all right, thanks for that. I might get to the, Brett, probably one for you, the digital ID and open banking are linked. Are you seeing that in the work you're doing around with your clients?
Yeah, so we're looking at Open ID as a way that we can actually facilitate it through our system, providing a token so that we don't have to pass credentials all the time. I guess today you've got the idea that you know, people are using screen scraping to get the information out of existing systems, and they're having to store those credentials in various places, which, you know, we're probably not rightfully or completely giving authority to do so. So the use of a digital ID or an open ID or some form of way of really providing a different type of credential, you know, is a very welcome one to, you know, really opening the system up.
If I can throw
please,
something on
Dan.
that, Kieran. They don't have to be linked, but I think that we're crazy if we don't link them. I think that one of the things that open banking is providing is a once-in-a-generation catalyst to solve a whole array of intra-industry data sharing issues. Because we've kind of created this catalyst for open data and a conversation for open data. And there are a number of material issues in the financial service industry which are ostensibly in existence because of barriers to data sharing. Digital identity, KYC, AML, income verification, expense verification, credit risk fraud, etc. And I think that there's a unique moment for the industry to step into some of the challenges the ACCC is going to have around practical implementation of open banking, lean into this idea of opening up data, and then take advantage of that to collectively work on solving material issues in industry which ultimately surmount to cost and risk and poorer consumer outcomes. So they don't have to be linked, but this is, you know, identity is just one data product in a myriad of potential data sharing products that could exist in, you know, kind of open banking platform context.
The big challenge for banks to avoid is sort of, you know, digging up the road multiple times when they're looking at these different projects and looking at those interdependencies, and how do you sort of orchestrate for that at the beginning of their journeys of enhancing their capability in those areas.
Yeah, that's right.
Vanessa, there's one for you when it comes back. The 15 years after privacy principles were introduced, I still hear orgs like Telstra say, I can't tell you because of privacy. How do you view that?
I've had several long conversations with Telstra's call centres about their interpretation of the Privacy Act.
Do you realise I'm on the phone behind you and you're taking too long?
Yeah, those calls often just cut out, sometimes inexplicably. Look, there's...
Sorry, there's nobody from Telstra here, so I think we got away with that.
That was Rocky clapping.
Yeah.
Look, the practical... I agree. There is a very poor understanding of how privacy principles are meant to be enshrined. And look, it's not fair to talk about the telcos in many ways because the call centre staff are set up with some fairly basic operational workflows, and the opportunity we have here, given that privacy is so central to the open banking regime, is to establish, as part of the establishment of the privacy safeguards for open banking, is to establish a new paradigm for privacy protection, one that's predicated on explicit, fully informed customer consent, and that ties back to each organisation's own authentication models. So whether they're based on some sort of digital ID or something else. And I think the opportunity then is to move away from those very poor understandings of privacy principles and to enshrine something that's far more robust and effective and responds to the needs that consumers have and that small businesses have. Because let's face it, we're actually, in terms of open banking, we're talking about consumers broadly, not just individuals who traditionally are the focus of privacy protection.
Good. And it goes to Danny's point about if you disrupt the origination chain and the service chain, we've got a real opportunity to try and simplify that.
Absolutely.
I think in relation to privacy laws, they were written for a different era, and no country's privacy laws are built for the emerging data economy. And, you know, to me, GDPR shows you what happens when you get it wrong. I think GDPR is perhaps the single biggest regulatory own goal ever committed by a market. It was designed to ostensibly slow down the growth of US tech giants. But the first companies who were GDPR compliant were US tech giants. Meanwhile, local industry has collapsed under the weight of compliance with some of those, you know, frankly, unimplementable data laws. So, you know, when I look at another market like India, their response to US tech giants was to double down on the concept of data sovereignty, which is to say any data relating to Indian citizens can't leave offshore, which means all of those tech giants have got to replicate their infrastructure, teams, processes in a local market, which is a much, much smarter way to deal to some of these issues. So I think we're going to see a fundamental rewrite of privacy laws, you know, a complete re-examination of the concept of data sovereignty. And the countries that get this balance between privacy and innovation right at a macro level set themselves up to win versus those that don't, I think.
Don't you love anonymous questions? There's one here from, I think it's from Adrian Lovely. Why can't the NPP, if we can throw that one up please, that'd be great. Why can't the NPP be the independent operator, facilitator of OB data sharing, etc., etc.? Vanessa?
Okay.
And I think it's the thing that I quite often, in fact, in the lead up to today, a lot of people said to me, can NPP be the right leg of what we're trying to do here? And I think the way to look at it is everybody's invested in NPP. How can we leverage that?
Absolutely. And look, the NPP has been designed as utility industry, an industry utility that's meant to be evolving over time and capable of, you know, doing more than one thing. When we think about what it is, it's not just a platform for the exchange of credit transfer messages. It's also a really well-resolved set of rules and governance arrangements, technical standards, messaging formats, you know, dispute resolution arrangements, and you know, has been designed with open access and graduated access requirements from inception. So in many ways, it's perfectly positioned to deliver capability that could be aligned to open banking. And if we step back and think about what right access is, it's Danny, I think, has taken the concept of right access to an extreme, perhaps, when he talks about it as being like a power of attorney on an account.
That was me.
Oh, sorry.
They're sitting next to each
Scott.
other, but
Yeah, one of you. And so if I...
You'll get one more turn.
If I bring it back and I think about, what we have now in our payment systems, when you think about setting up debit arrangements on your account, they're essentially authorising some third party to do something at some point in the future around pulling money out of your account. It's not a concept that's completely foreign to consumers. It's one that we're really comfortable with as consumers. The challenge we have is that my personal view is that even though Australians are very, are great adopters of new technologies, there's an inherent sort of reservation around jumping in headlong unless they're really comfortable about the security and liability arrangements that attach to anything that is new. And so when it comes to right access, perhaps that's, as Scott said, not only very difficult to implement in an open data for banking model, but perhaps a bridge too far for now. What NPP has, with all of that magnificent capability around payments and payments initiation and a set of messages that are coming around requests for payment that are authorised, customer authorised push payments, I believe we get to a point where we have something that's effectively right access. And when we're thinking about how we want to leverage this industry utility for the entire industry, and that is more than just our traditional ADIs and financial institutions, but the whole sort of payments ecosystem, then we think about how we can leverage all of that capability to deliver something that perhaps offers consumers significant uplift on what they've been used to in terms of those traditional debit type products, and offers merchant benefits as well in the longer term. And we're really open to thinking about those. But whether we're actually ready to seize the mantle and claim that space, I'm not sure that we're quite there yet.
Can I give a counter to that? Why
Sure.
NPP would be a terrible idea for open banking? And Vanessa, correct me if I'm wrong here, but NPP really takes money from a high security environment and moves it into another high security environment. So effectively an ADI to ADI kind of transaction. Open banking is about taking data from a high security environment and putting it into a no security environment, a low security environment in a fintech, which is, I think the primary flaw with the UK model is the systemic risk that it builds into its digital economy. And so I think our opportunity to materially advance the ball forward in Australia is to create, a technology layer that enables not data to flow to algorithm, which is what creates the risk, but to bring algorithms to the data. So we minimise the flow of raw data across the economy. So it's a differential security model and the flow of data moving out of, I think, a secure system that is the big difference between payments and data, between write and read. And I think that needs an entirely new architectural set of principles to address than what were designed for the NPP.
Good, thank you. Right, 2 minutes to go. I'm going to finish with Scott. Is it feasible to believe the average consumer will understand the risks around consent, giving informed consent?
Dangerous question. The reason it's a dangerous question is too many people make assumptions about other people. And I learnt this from a number of personal submissions which were written to me in ink from real people during the review. Those people, who were not obviously the entire Australian population, understood things rather well in relatively clear terms. And what I ended up deciding around this is it wasn't my job to make decisions as to what other people couldn't choose to do. In fact, what I learned was that there is so much data sharing going out there right now, and people don't even know that they're doing it. And an analogy that I use, which I know Kieran's heard before and maybe you have in this room, and it's because I've spent a lot of my time as a lifesaver on a beach, is there are so many people swimming in the dangerous surf right now. They don't even know they're swimming just yet. And so this idea about providing a better consent mechanism is about putting in a set of red and yellow flags. It's still surf. There are still aquatic animals and rips and all sorts of things out there, but it's supposed to be better. It's not supposed to be perfect. If we wait for perfect, we'll be waiting, and other countries will do this and we will do it their way rather than our way. And so do I think that they understand the risks enough? Not right now. It's part of the education system. But the good thing about doing something, for example, with red and yellow flags, is you get lots of people who know how to swim to help keep everyone else safe. And so it'll be people like you in this room, when you engage with this as part of your business, that I am hoping that you too will help keep your customers safe in this environment, because we're kind of all in this together.
Thank you. We're bang on time, and apologies for those questions we didn't get to, but what we'll do is take those and I'll diligently get the panel to answer those offline and we'll feed that back to you. So, Annabelle, back to you.
Thank you very much. Yes, some great questions there, and I actually just wanted to ask very quickly, because this particular question had 6 votes, so it's obviously a very keen interest in finding out the answer. Very quickly, what are some of the fintechs that our sector can part with now to take advantage of open banking?
They'll say Data Republic.
Data Republic.
I mean, look, there's a bunch of them. I mean, the reality is there's, guys at Proviso, or formerly known as bank statements, Verency, Tasobi, who I think 86400 had up from Germany that here. I mean, there's a whole range of them. It depends on the use case.
You could look for if you want a telephone directory of them, have a look at the people who made submissions in the back of my review. I've listed them all. Those are the people who were keen enough to actually influence part of the structure, and they might be very useful people to talk to.
Yeah. And in fact, yesterday, 64 submissions declared on the most recent round. So that Scott's right, that sort of telephone list is there on the Treasury website.
Excellent. Okay, thank you very much to our panel today on open banking.